Good afternoon, everybody. This is Trey getting in touch with you from Japan. This week is also humid. The markets are still insane. And my hair is also still cray-cray. Today we're going to be talking a little bit about types of investors. We've been going through a series analyzing a few different credit card companies. And in those videos I had said, if you're this type of investor, this stock might suit you. And I started to get some comments from people being like, what type of investor should I be? What type of investor am I? I don't know, man. So in today's video, I put together a list of 4 types of investors based on their goals. There are other things to consider like your age, your risk profile, how much time you're willing to invest in things, how hands-on you want to get, things like that. But if we look at it based on your goals, you know, within your goals, there are also different types of people doing those different types of things. The first profile would be the person looking for capital preservation, which probably none of you watching this video are. This is like, hey, I'm retired or I'm about to retire and I have like jillions of dollars saved up. How do I not lose it all? Or how do I prevent the value going down because of inflation? If you're not sure what inflation is, it basically means the value of your currency gets weaker and weaker over the years. For example, when my dad was a kid, he could buy a hamburger at McDonald's for like 5 cents or something like that. And now, you know, it's like $5, $6, $7. Currencies tend to do that as inflation goes on over the years. And so if you are retiring when you're 65, you want your currency to be able to be worth something even in 20 years or 30 years if you plan to live for a while. I'm not going to go into too much detail on this strategy because it doesn't apply to too many of you. The second investor type is the one who is planning for retirement or preparing for retirement. Whether you're 15 years old or 60 years old, I think it's wise for all of us to be thinking and preparing for retirement. Here in Japan, the government basically came out a few years ago, similar to the US, and they're like, hey, our pension system isn't doing super good, so we recommend that you save up at least $200,000 before you retire. Good luck, guys. Bye. And so in the same thing in the US, you know, we're raised, basically don't expect Social Security when you actually retire. So here are some steps you can do to prepare for that. Generally speaking, this type of goal requires that you have a really long-term perspective. It can be very automated, and it can also be pretty hands-off. If your company offers a 401k match, even if it doesn't, it's smart to put away, you know, a certain percentage of your income each month and invest that, and hopefully it will grow over the years. Generally speaking, we know that, at least in the US, over the history of the entire stock market, as long as you're looking at like a 10-year plus period, things go up. That's not true in Japan over the last kind of 30 years, but if you are in Japan, you're able to invest in the US stock market, and generally you can expect kind of like a 7 or 8% return or 7 or 8% growth over the years. When we're thinking about retirement planning, they generally say for every $100,000 you have in your brokerage account, you're safe to take out $4,000 a year, and generally the lump sum that you have isn't going to get much smaller because it's like gaining money and then you take it out. It's gaining money and then you take it out kind of thing. And so if you multiply that 100,000 by however many you need for retirement, you know, then it's a pretty easy basic calculation. If you're enjoying this video, please hit the like button down below. That will help me very much. People who are just planning for retirement aren't necessarily too caught up in like, oh, I invested this much money in this stock and within like 1 year it tripled. Oh my gosh, I'm so lucky. That would probably fall into the next category, which is capital appreciation. If you are an investor looking for capital appreciation, you're probably more likely to be a bit more zoomed in, a little bit more active, a little bit more intentional in monitoring the stock market each day. In terms of time investment, there are some people like myself who, you know, I spend, 20 minutes a day looking at stuff, catching up on the news, maybe doing a little bit of analysis and stuff like that. And I'm still enjoying the fruits of, you know, a stock going up 3 or 5 or 10x over a year or 2 or 5 years kind of thing. But, you know, zoom that scale all the way over to time investment, full-time day trader. These people have like 5 monitors set up with all these charts and analytics and all this stuff, and they're kind of like making a bunch of trades every day. If you're watching this video, you're probably not a day trader. Personally, I do a bit of this, but I also, consider the fourth investor type, which is the dividend investor. This is a really popular trend going on in the internet over the last few years. A lot of people are just kind of like, I only do dividend stocks. I only buy dividend stocks. And kind of the rationale behind this is you're putting away money in dividend stocks. Those stocks are giving you a little extra bonus every few months or every year. And little by little, the amount that it's worth gets bigger and bigger. And if you multiply that by 5, 10, 20, 30 years, then it ends up being significantly different. So for example, if your cell phone was $50 a month or $600 a year, and you had something like $17,000 invested in Coca-Cola stock, which is paying off that dividend, then basically you don't have to worry about your cell phone bill anymore, because that you could just use that dividend and send it straight to your cell phone company. And $17,000 is a lot of money, but you'll be surprised how quickly things grow over the years. And you apply that to your cell phone first. Next, it might be like your rent or your mortgage. Next, it could be like your car payment or things like that. And granted, that takes huge amounts of money to be able to throw off that much dividend income. But if you get into that mode, kind of over 20, 30, 40 years, basically you can be like, I don't have to do any more work because my companies just pay me dividends and I can just chill now. I'm a little bit of a mix of capital appreciation and dividend investing. You don't have to just be one. The reason I have chosen to be like this is because I find that I have a little bit more tolerance for risk, and I also have a little bit more tolerance for like digging into the numbers and doing some research and stuff like that. And I recommend that style if that's your type. If you're just like, I hate math, I hate numbers, I don't know what to do, then you should probably look more into just kind of being a passive retirement investor or a passive dividend investor, where you just automatically, I get my paycheck, 10 to 20 to 50% of that automatically goes into my brokerage account, which automatically goes and buys me some stocks, and then those grow over the years. You're not so concerned with what's going on in the market right now. Like Dow Jones went down 3% last night. You're not sitting around being like, oh my gosh, I'm going to be screwed when I retire because I lost 3% right now. Basically, you zoom the chart way out 10, 20 years, and that little 3% drop that happened last night doesn't even matter because generally things are trending upwards. And so if you're really, really like, I want to be doing this full time, I'm super interested in this, look into day trading, but statistically, your odds of succeeding as a day trader are incredibly low. The general advice on the internet right now is like, get a skill, master a skill that can pay you, or start a company that provides some service that can pay you, and try to save as much of your income and invest it as possible. I may be doing some videos coming up soon on retirement planning and also different types of dividend stocks you can look into or things like that. Let me know if you have any requests for things that you'd like to learn more about. Leave a note down below and I will comment. Thank you very much for your time and for watching and for joining us here in Japan today. I love you guys. Have a great day.